If you understand what Bitcoin is, when the price goes down, it means you get to buy more Bitcoin. It's a gift. It is somebody is saying to you, hey, this asset is trading for, right now, $20,000 cheaper than it was a couple of weeks ago. The truth is that you're not making or losing money until you actually sell and capture that value. I am focused on decades for my portfolio, but I'm focused on hours and days for my work. That to me is the best strategy.
Bitcoin is the hardest asset in the world. So why do people panic when the price dips? Today, we sit down with Anthony Pompliano, one of the most influential voices in crypto, to break down why volatility is a feature, not a bug, in Bitcoin's long-term success. He shares why smart investors see price drops as a Black Friday sale rather than a reason to panic, how leverage and speculation lead to emotional decisions, and why focusing on the long game is the key to wealth accumulation. Plus, we'll dive deep into the bigger economic picture. Trump's shifting economic focus, the so-called Mar-a-Lago Accord, and the battle over interest rates. If you're looking for insights that will change how you think about Bitcoin, inflation, and the future of financial markets, you won't want to miss this. Stay tuned, hit that like button, and subscribe for more exclusive interviews with the biggest names in finance and crypto.
We should stop worrying so much about this price drawdowns. If you understand what Bitcoin is, when the price goes down, it means you get to buy more Bitcoin. It's a gift. It is somebody is saying to you, hey, this asset is trading for, right now, $20,000 cheaper than it was a couple of weeks ago.
It's Black Friday today for Bitcoin.
So if you like Bitcoin and the price is $20,000 cheaper than it was a couple of weeks ago, then you're probably buying. There are plenty of people, though, who either one, don't understand Bitcoin, and so they bought at the top, like, this thing's only going down. I thought it only goes up. This is a problem. Doesn't feel good. The second is there's a lot of people who get greedy and they use leverage. If you go and you start using leverage and the price goes down, it goes against you. That can cause a lot of pain. And the third thing is there's a lot of people who have been trying to come up with all kinds of weird ways to use their Bitcoin or take their Bitcoin, borrow against their Bitcoin, all these things. If you just buy spot Bitcoin and you hold it, it's kind of like real estate, right? Go back to 2020. Think about real estate in a lot of markets. You had bought a piece of real estate. It sits there. There's no stock ticker to it. There's no price every single day. But, the COVID thing happens. All of a sudden in March and April, real estate prices are crashing. Everyone's worried. Then by the end of the year, everything's come back. Now all of a sudden real estate prices are up. That volatility you really didn't see unless you're a weirdo and you're going on like Zillow or LoopNet every single day. The problem here is that everyone sees it every single day because it trades 24/7. And so what you have to understand is control your emotions. That is one of the hardest things to do in investing. I know people, and sometimes it happens to me. You wake up, you see green. Prices are up, you feel good. Hey, we're having a great day, we're making money.
I love seeing green.
Wake up the next day, you see red. Prices are down. Dang, we're losing money. The truth is that you're not making or losing money until you actually sell and capture that value. And given that most Bitcoiners are not going to sell, then you own a certain number of Bitcoin. Don't spend your mental energy focused on how do I go and kind of handle the fact that the dollar exchange price is going up or down. Focus your time and energy on how do I make more money so that I can buy more Bitcoin. And I think that if people can channel their energy towards that, it's much better. It is obvious, but it's worth stating. The more that you look at your portfolio, the more that you look at the prices, the less happy that you will end up being. And so what you have to train yourself to do is say, look, I own what I own. It's going to be good or it's going to be bad. I don't know. All I know is that I'm going to keep trying to make more money so that I can go and I can buy more in my portfolio, and I'll let the process take care of itself. I am focused on decades for my portfolio, but I'm focused on hours and days for my work. That to me is the best strategy.
Yeah. Paulina's worry barometer starts pinging when it hits 6K. Okay. So let's talk about Jim.
That's not true, by the way.
Why?
Because you forget that on March 12th, 2020 is one of those days, like when you first get in a relationship with someone.
No, I remember you were worried.
No. When you get in a relationship with someone, you're like, I think that this person, they're the type of person I want to be around. They've got, certain attributes, all this stuff. One attribute that I did not think that you had was cool, calm, collected, emotional control in financial markets.
Yeah, everything else I'm like, woo, but financial markets,
That
I'm
was
a
not
cool
on my,
cucumber.
like, if I was to create like a rubric of evaluation, you were not getting an A+ on that. I would have been like, she's probably like average, whatever. March 12th, 2020,
Average.
Bitcoin dropped 50% in a day. I dropped 20%, I bought more. It dropped, 30% I bought more. 40% bought more. When it crossed over 50% drop, I remember sitting on the couch staring into the abyss, being like,
He was staring
we
into
may
the
watch at the time 96% of our net worth evaporate today. Just
it was
go to
March
zero.
2020.
I think it was March 12th, 2020. And you said something to me. You said, what's wrong?
It closed at 4,097.
And it started the day at over 8,000.
Yeah, 7,900.
And so I remember sitting there and you said to me, what's wrong? And I said, we may watch this all go to zero today. And you said to me, we're already all in. So like, just buy more.
We were all in.
And I remember being like, that's the most gangster shit I ever heard.
Sunk time cost theory, whatever it's called, out the
Okay,
window.
well, let's
out
not-
the
let's-
window.
You
Time
just
sunk cost,
take
money cost.
take the congratulations you were getting and run.
Okay. Well, I was just.
Don't stick around, till people figure out that you don't know
I
what
gotta
the time
say,
value of money is.
I've known you for almost 10 years now. I've never seen you like that.
Yeah, that day was bad. Yeah.
And now we're saying it crashed to 87,000. Please.
All right. What's the
Okay.
next topic?
The next top. Well, we didn't talk about.
I think that's the only day ever in financial markets where I've been like, this is bad. But that day was, this is bad.
So Jim Bianco's Mar-a-Lago Accord is pointing out that the dollar is too strong. Tell us what this is.
So the dollar is too strong. And the idea of the Mar-a-Lago Accord is basically taking out of the playbook of, there's something called the Plaza Accord. There's obviously people know about Bretton Woods. These are different meetings that people have had where various countries have come together and they basically have made an agreement where they literally sign an agreement, take a picture with each other, thumbs up, okay, let's go do this. And they're essentially changing the economic environment or the economic order across countries. Usually the Federal Reserve is only making changes to the US dollar, the US economy, US interest rates. But this is kind of a more planned global thing. And so in both of those situations, one, we obviously, really focused on the dollar, and another, we basically tried to significantly weaken the dollar. And there was a whole bunch of stuff in terms of U.S. exports and imports from Japan, et cetera. So these things have happened throughout time. I'm not going to get into all the details though. This idea of a Mar-a-Lago Accord is not to be taken literally. They didn't have a meeting. They didn't all come together. But it is this idea that there's a group of people who came together virtually in terms of President Trump, Treasury Secretary Scott Bessent, Elon Musk, and a couple of others. And they basically are now implementing a completely new economic order. But this is one that is being unilaterally implemented by the United States on the world. And so the question is, will it work? Now, the desired outcome from this is that they would like to reduce the national debt. They would like to weaken the US dollar, and they would like to get interest rates down. Those three things, right? Weaken the dollar, get the debt down, get interest rates down. Now, the way that you do that is you can't take a single solution and try to have multiple outcomes. So you need to have multiple inputs, have them impact each other to be able to get multiple outcomes. So there's three main pillars to this idea of a Mar-a-Lago Accord. The first is that what they want to do is they want to establish a sovereign wealth fund. Obviously, that's being done. They've announced it. They're putting it in motion. The second thing is tariffs. That also is being implemented. And then the third thing is that once you have more revenue, and also once you have once you have the tariffs, and then also once you have the sovereign wealth fund, then you've got to be able to cut a lot of costs. And that's where you see Doge and other things coming in. But cutting cost is trying to get after the debt, but you can't just do cutting costs through Doge. You also have to make an agreement in Europe. We're providing security for the world. Pay us money. Why are we providing all this security, but y'all ain't paying for it? Right? And so it goes back to this idea that the countries know that they should be paying for it. We just have never had somebody who goes to them and says,
To enforce
pay us
it.
the money.
Yeah.
So this idea of payment for security agreement is being implemented in Europe. This is definitely going to happen. They're going to pay more money. On top of that, you see the Doge stuff. And then there's this idea of what people are calling a century bond. And in a very generalized manner, the idea would be that if other countries are holding debt, we would do a debt swap with them. And we would essentially swap the debt for these 100-year bonds that would be much more advantageous for the United States for their debt holders to hold these 100-year bonds. Now, the reason why I describe all that's a lot of stuff going on. And so it can feel kind of chaotic when you're trying to evaluate stuff, you're trying to implement things, you got the tariffs, you got the sovereign wealth fund, oh, let's run over here for security for agreement, etc. But the general idea is we have to weaken the dollar, we have to get interest rates down. And the interest rates in particular maybe are one of the most interesting parts because Trump's first presidency was completely focused on the stock market. And people who have watched these episodes for months now have heard me say Trump measures the US economy by the stock market. That's what he did in the entire first term. That's what he's always done. But now Trump is actually changing his mind. So when we get new information, we have to change our understanding of what people are actually paying attention to. Trump, obviously, as we see some stocks are coming down, is willing to trade a lower stock market for a lower interest rate. And so what he's not worried about is the US stock market. He is fully focused on the 10-year Treasury bond yield. And he wants to get that down because if you get the bond yields down, now all of a sudden it's cheaper for people to borrow money to be able to go buy homes. It's cheaper for corporations to be able to borrow money. And you should see a surge in economic growth and activity. And so it goes back to this idea of creating an economic environment where we can actually grow our way out of the problem, weaker dollar, less debt, and get those interest rates down. That's the whole idea of this Mar-a-Lago Accord is can you remake the U.S. economic policy in a way that should have an impact globally where the United States ends up in a better position than where they started? Big, bold idea. But we need a big, bold idea to address the problems that we have right now. And so the debate, the controversy is all about can it actually work or not? We're going to find out.